A massive day for this ticker as it has laid dormant for quite some time now. I have ran a historical volatility versus stochastic momentum backtest on this, and there appears to be a higher probability for continuation. Let's pop open the hood to observe the potentials now. Welcome back to the channel on this sunny Sunday. This is Arca, and let's dive into GME. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. I am seriously saying that this is going to be your first face reveal for Arca himself. So let's go ahead and get that rolling right now and stretch that bandana here in respects for that ticker symbol GME, right? So what is up? What is up? Let's go ahead and get this analysis running. All right, so what do we have here? So this is GME on the 5-minute time frame here, team. Of course, we're noticing here that we're above a major amount of moving averages here, right? This is your SMA 100, EMA 200, and SMA 200 looking good. Now, observing here the daily time frame, let's go ahead and do that instead, right? Take a look at this. I want you to observe how this is. You know what? The daily time frame would actually do it pretty good as well. I want you to notice that we're above a critical resistance here that was back from November of 2013. Let's go ahead and just jot that down there. And observe that we're getting daily closures above that level there, which are pretty good. This means that there's a huge break of market structure. And something else, team, I just want you to I want you to take a look at this, as this was something actually that we talked about on, let's see, April 11th, 2024. And I'm going to go ahead and bring it up on this window here just so that you guys can see exactly what I have in line right here, right, guys? This was something that's not brand new. We were already potentially observing the potentials of, the upside continuation for this ticker during a live stream, right? So let's go ahead and take a listen to that right now. Let's go ahead and just switch over to this screen right over here and take a look at this phase happening. Massive green. We're actually getting bull volume prints on the 4-hour as well, above the moving average. Let's see the 6-hour time frame. 6-hour time frame, huge upside pivot. We're about to start expanding outside of the 15th percentile of critical contraction. 8-hour time frame also, huge upside pivot here. Guys, this is potentially leading for a multiple time frame upside move. I don't know why, I don't know how, but the 12-hour time frame is also showing massive strength as well. Daily time frame, damn, critical expansion here, and we're now shifting towards an upside. I don't even want to see the buy daily. Man, let's see. Oh, holy crap, nice. Okay, this was a deep area here of contraction, very large area of contraction, and we're now expanding, and this is starting to get that correction pivot towards that upside, and it is retracing from a very notable area. If we apply a line like that and we look historically, you can see how many times there has been explosive moves to the upside from this very area that we're trying to retrace from. You are hearing it right now, team. We were already observing the potentials of GME exploding from weeks ago. Okay, that was actually April 11th, 2024 on one of the market preps here. So we absolutely nailed that potential, right? So let's go ahead and observe the probabilities here, team. I do have a back test that I actually calculated here using historical volatility and linear versus stochastic momentum, right? So this is my new volatility index. This is a heat map. And this is how I ran the back test. Anytime that volatility contracts into this critical level down here, and then it expands into that expansion phase, I have taken note of every iteration where that has happened throughout the entire trading history of GME on the 5-day time frame. Okay, so that 5-day time frame has led to this data right here, right? These are all the iterations right here. So take a look at this. 21 total iterations, and of those, 16 have been guessed correctly to the upside. That gives us a 76.19% upside accuracy, with an average upside thrust of 30 spots, 78% over the span of about 101 days. Now, don't pay too much attention to the average days. It is consistent to a 5-day time frame, so every single candle that opens here and closes is around that 6-day time frame in order for this to close, right? So let's go ahead and take a look at the data here. Let's plot it now because the signal has already been fired, okay? So we're going to plot this into the chart to understand what the probabilities could be. Now, the markets are supporting an upside as well, okay? So this is something that we should also kind of keep in mind. The signal fired off the moment that we had both volatility pivoted towards the upside and the moving average pivoted to the upside, right? So that, yeah, it fired off right down here at the start of this. I'm just going to make sure of that, actually. Let's see. Let's see exactly where's that fired signal. Ooh, it could have been on this here, but no. Actually, yeah, definitely right here. Okay, so at the opening valuation of this candle, which is $11.18. So let's start plotting out that data as we have, let's see, a 30 spot, 78% move to the upside. Let's measure that up and plot it. 30 spots, okay, let me just get rid of that. And take care of this here. So 30 spot 78 from the firing of the signal, that was leading towards a $14.63 zone. Of course, we already knocked that out of the way. The important thing is that we have already calculated the upper bounds of the first, the first, second, and third standard deviations and the standard deviation for our benefit. Okay, so let's go ahead and apply the 13 spot 73 standard deviation here and see where that takes us. 39 spot 73% leads us to a $15.67 zone. Now, leading further beyond that, let's go ahead and bring the data down here. See what else we have. Okay, now the upper bound of the first standard deviation is leading us to a 70 spot 11% move to the upside. Let's plot that now. 70 spot 11 at the upper bound of the first standard deviation is taking us to around $19.12. Let's keep going here because there are further calculations. Now remember that these are just statistics, right? They are not certainties. They're only telling us the probabilities of this, all right? So let's go ahead and now calculate the upper bound of the second standard deviation, marking off a 109 spot 44% move to the upside. Here we go. So that'll lead us to roughly, can't get it closer, all right, 2358. And there is one more to calculate here, and that's going to be the upper bound of the third standard deviation, right? So now let's go ahead and apply that. Roughly about here, 148.77. I think that's going to have to do it right here. That would be a topside target of $27.99. Now, if we observe here the immediate short-term time frame, let's see if we have or are supporting a potential pullback. All right, so what we're going to do here is pull this chart back. I'm noticing here that the camera kind of went out, right? Let's go ahead and just refresh that boy real quick and get this thing rolling. Okay. Here we go. Let's get this thing going now. Right. It's the battery. It's all good. We're going to go ahead and stream this in just a bit anyway. So here we go. All right, team. So if we're going to experience a pullback here, let's just go ahead and see the fact that we have the SMA 50 right above us at around $16.18. If there is a probability of a pullback, I wouldn't doubt for us to come back to that SMA 100 at around $15.24, maybe even lower. We're running at about a $1.05 average true range on this. So yeah, we can subtract here a dollar and land right around that 15-cent zone. I would say anywhere between, I'm going to pull it in here and I'm going to pull it right like this. Check it out. This could be an area of support for us to observe. 1436 to 1516 with a center bound of around 1476. Let's take an inverse fib and see if we have anything lined up there. Well, definitely so, right? Let's go ahead and just observe here that we have the 1.618 at 1490. So we're just going to go ahead and take into account that 1490 to the 50% retracement, I would say, just like this here. Anywhere between 1475 to 1505 with a 50% of 1490 at the 1.618 before us, I would say distributing to finding a new reaccumulation phase. So heads up on that, all right, team. It's looking pretty good. Nice. All right. So yeah, team, if you have any questions, please remember that we still have the Arc Masters course being offered here, right? So go ahead and get in touch with me at ArcMastersCourse at Gmail. And I'm going to be giving, actually, I'm going to be live teaching a crash course on the beginners charting and beginners trading lectures. Okay, that's going to be a 4 to 5 week. It was condensed, or it is condensed, from an 18 to 19 week program down to a 4 to 5 week program that's going to be segued into the strategies mentorship program, which is going to be about 8 to 12 weeks. Make sure to hit me up. Send me an email here at ArcMastersCourse at gmail.com, and I'll make sure to give you all that pertinent information, syllabus and disclaimer and everything. If any questions at all, you know where to reach me. All right, team. So let's go ahead and sign this thing out, and we will be good to go. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your weekend, and I will catch you at the Bell Mañana. Adios, team. Yeah.